Another day of records for the Dow Jones Industrial Average. At one point on Monday, the Dow crossed the 16,000 mark for the first time in history. The Standard & Poor's 500 crossed 1,800, also for the first time, though both indexes ended lower. The markets have been buoyed up by the government's multi-billion-dollar stimulus program called quantitative easing. And President Obama's choice to be the next chair of the Federal Reserve has shown no sign of ending it soon.
I consider it imperative that we do what we can to promote a very strong recovery. We're doing that by continuing our asset purchase program, which we put in place with the goal of assuring a substantial improvement in the outlook for the labor market.
Historically, record highs have been followed by record lows. That was the case in 2000 and 2007, where peaks were both followed by marked dips in the S&P 500. Forecasters have already begun scaling back expectations, worried that the strength of markets is not backed by a strong enough economy.
The expectation is people have made a fortune in fixed income or bonds. There's really no more interest rates to cut. So the only place to be is in the stocks because the fixed income world has already peaked out. So you're pushing people out of one thing they've made a lot of money into another they've been doing really well in. And you're basically telling them, if you're the Federal Reserve, keep buying risk assets. We'll make sure you don't lose your money.
These new market highs may or may not signal an end to the boom on Wall Street. But no matter how you look at it, 2013 has been a good year for equity investors in the United States. Kristen, Saloomey, Al Jazeera, New York.